Hello, everyone. Welcome to our weekly Thursday session where we discuss financial literacy matters. This is a community series to educate each other and learn how we can be better managers of whatever finances that we have. Again, finances face everyone. It doesn't matter if you're in education, healthcare, you work for yourself. All of us, money is a daily commodity, so we use it and we want to manage it well. So I do want to give a special shout out to the Miss Immaculate, who is part of the Rwandan community abroad in Texas, who has been such a champion there, as well as other great colleagues like Mr. Roy and Mr. Herbert. They've all been great community educators, and it's such an honor and privilege to bring it to my people in Missouri, who I'm so thankful for to see a representation here. So let's use this time to grow together and learn together. Okay, so I'll go ahead and share with you some slides with things that I've prepared, and then we're going to have some time for questions. Okay, so tonight's topic is financial security, specifically when you need it the most. And to focus that, we're going to be talking about understanding living benefits under life insurance. So my name is Dr. Sharon Wanyuze. I work at the University of Missouri, here specifically Missouri S&T, if you're familiar with the Missouri school system. I've been here a few years, and I'm passionate to see not only young people but families thrive, so that we can all do well in this country, whether we are abroad or even if we are back in our countries. All of us can use better financial literacy. We can't have too much knowledge in that regard. So I'm hoping that tonight we can all learn something, or at least be reminded of something that could help us individually and our families. Okay, so when I say this term living benefits, I'm going to define it and give some examples as we go, but let's first talk about where it could be useful. So specifically, if you live in the United States, medical emergencies are, a number one cause of bankruptcy, meaning that if you have had your savings and unfortunately you get like a heart attack or cancer, or diabetes, or you need major organ transplant, all your savings can quickly go in a matter of a few months. And we know that our healthcare system in the US is still very complex, and it tends not to cover all the things that we need it to cover. And we know that sickness can happen to anybody. It doesn't matter, if you're young, old, middle-aged, anybody can get into an accident or get an illness. So today we're going to be talking about different types of illnesses and what we can do to protect ourselves financially in case of that. So the first one that we'll talk about is, let me point to it here so that we can go together. The first one is critical illness. I'm going to define it later, and then the other one is terminal illness. And then the other one that we're going to talk about is, let's say you're not sick, and this is for our elderly members of the community. Let's say you have a parent or grandparent that can no longer feed themselves, or take themselves to the bathroom, or do daily functions on their own. This is something that can also benefit them. Specifically as a community, we have seen how GoFundMes are often shared whenever somebody gets sick, whenever somebody dies in the community. And I know specifically I've seen so many GoFundMes come through in different WhatsApp groups. So I'm hoping that as a community, we can help each other with tools so that we don't have to rely on GoFundMes. A GoFundMe will probably help bury a loved one, but they're not going to take care of the remaining family members. A GoFundMe, if you're a young person, and unfortunately you got into an accident, they may help you with some initial costs, but they're not going to help you long term. So this is something, again, finances affect anybody, young, middle-aged, or old. So let's talk about this specific tool that I learned and I've practiced myself since I was still a student doing my grad school. So this is something that I used to think it's for people who are closer to retirement or, maybe with families or older. But I've noticed that you can pair it with an investment tool. So again, here we are learning how we can make the most of the little or much that we make. So I used to think that life insurance is something for people who need it in case they surprisingly pass away and they leave kids. I didn't know that it's something that you can use depending on the product that you choose as an investment tool, where even if you're a student or a young adult or a young family, you can put a little bit away, and instead of it sitting in the savings account where it accumulates 0.01, it can actually grow more, so that in case you do need it, like a sickness, you don't have to die to use it. You can actually use those funds. So let's define it. Again, I like definitions so that we're all on the same page. What is life insurance? It's a financial product that provides a lump sum payment to your beneficiaries or yourself upon death or sickness. It is designated to offer financial security and a peace of mind in case you no longer have an income coming in. So what does that mean? Tuvuge na wagize aksida warwaye ntabwo ugishoboye kujya ku kazi. Iki turi kwigana hamwe uburyo wabona uko ukomeza kubaho ufite icyubahiro, udasabiriza cyangwa umuryango wawe udafite ikibazo. Turi hano rero kwigira hamwe ibintu byadufasha. Ibi ntabwo ari byo byonyine bidufasha, ariko ni ikintu twize twafashanya. Okay, so let's continue here. So anyone who has debts, I know in the US we use a lot of credit cards, we have mortgages, we have student loans. If you have any debt or someone who relies on your income, or you have somebody that relies on your income, like kids and elderly parents, this is something that you should ask yourself. If anybody benefits from you or needs your financial support, you need to cover them and protect them. So if you have a job, you tend to be offered what we call term life insurance when you go to work. Or if you're a young family, you've probably heard of term life insurance. But I'm going to be focusing on a type called Index Universal Life. This is what I would recommend because it has that savings, accelerated savings. That's what I call it. And this is something that we can get those financial benefits while we are still living. So let's start by talking about group life insurance. If you're being employed, many employers will offer this to their employees as a benefit. It's the key features here is that while you're at that job, the employer will offer you up to your year worth income if you got a problem with sickness or accidents on the job, things like that. Unfortunately, if you move to another job, all that coverage doesn't go with you, okay? So you need to have something for yourself. The second one is term life insurance. This is where it covers you for a term. So say you choose 10 years or 20 years, you're a young family, you want your kids to be protected while they are still young, maybe the first 20 years, you may choose that. Every month you pay a little, relatively small amount compared to your permanent one, and you do have those life living benefits. So what is living benefits again? If you were to get sick, heart attack, cancer, or those strong illnesses, or get some sort of disability where you cannot feed yourself, go to the restroom, those funds that you've been paying per month will come back to you and support you and your loved ones. All of us pay for car insurance. You can't drive a car without car insurance. We insure our cars, we have to. If you have a home, whether you're renting or have a house, you have to pay either renter's insurance or like home insurance. However, we don't really think a lot about insuring our own lives, yet our lives are irreplaceable. So again, we're here to remind each other. These are things that we know, but maybe we have not been reminded enough until we see somebody in our community or in our families have a problem, and we have to then resort to GoFundMes, unfortunately. So the third one that I want to highlight again here is Indexed Universal Life. This is permanent, meaning that it's going to cover you for 120 years of life. I don't know somebody who has exceeded that age, at least currently. So we know that if anything is to happen to you, you get those funds coming back to you. So we'll ask all right. Okay, let's continue here. So, as I was saying, let's go back to the car insurance. We know that we have to pay car insurance or health insurance. If you don't get sick or if your car doesn't get an accident, you still have paid and it doesn't come back to you. Okay, but with this Indexed Universal Life, I compare renting a house where you pay your funds every month, but then when you leave the apartment, you don't get your money back. That's like term life insurance. Yes, you pay it. If anything is to happen to you during that time, they'll cover you. However, once that term ends, 10 years, 20 years, 30 years, you don't get anything back. So the cash value and all those benefits expire after that term. This is the opposite with Indexed Universal Life. Indexed Universal Life is like owning a home, right? You pay mortgage every month. However, even if you were to go sell it, that equity that has been building will benefit you. So it's more permanent, and you have your living benefits, meaning they'll cover you if you get a strong sickness or unfortunately death. Your dependents will get it for your whole life, basically, up to 120 years. The nice thing that I like, as a younger person, again, what really drew me to this is cash value accumulation. I remember, if you remember back in COVID, several people got stimulus checks, right? There were the checks that we got then, and I started thinking about investing. I was like, okay, this is money that I got without expecting it. What can I do to help, my savings and learn more about this financial literacy? So that's when I started looking into this. And I had been wanting something that I can invest in without having to monitor it every couple of weeks. And I knew that it would be somewhere where it grows. So in addition to other investment options, this is a really great investment tool that I saw that not only has the investment portion, but has the life insurance portion. So let's talk a little bit about it and see how it would protect you in a wholesome way. So with just one monthly payment, that you would be comfortable with, you would work with a licensed financial professional, which we have several in the audience so far, and you would determine how much you're comfortable giving in per month. Just like car insurance, when you go to get it, you choose what you're most comfortable with and how much coverage you need. So even this one, it's one payment. For Indexed Universal Life, it's going to give you those savings, so they'll reinvest it for you and make sure that it's growing at an indexed market rate, meaning that it's higher than your typical, keeping it in a bank savings. It's going to grow at a much higher rate. The second benefit is that if you get sick, again, those sicknesses that we've talked about, you will get your money back. And unfortunately, if there's death, your beneficiaries, your kids, your parents, whoever you put there as a beneficiary will get it. So let's dive deeper into the living benefits because that was the highlight of tonight's presentation. Let me give examples of those illnesses again. Illness, again, can happen to anybody. So it's important that we protect ourselves and whatever we've been working so hard for, we don't get bankrupt because of a sickness. So again, living, like the name says, you get your benefits while you're still alive. And this is for illnesses that are termed as critical, chronic, or terminal. So what does critical illness examples of these stand for? One is heart attack. The other one is stroke, cancer, organ transplant. Let's say you need a kidney. That's a common transplant, unfortunately, these days. The other one is, we know diabetes is very common now, and unfortunately, and you can get other problems because of diabetes. Some people get blind because of diabetes. So if you were to get that diagnosis, you would get your money back. And then paralysis. And then let's give examples of chronic illness. Chronic illness means that you have been diagnosed with a condition where you cannot safely perform any two of the following. You cannot bathe yourself, you cannot dress yourself safely, you cannot feed yourself, you cannot go to the restroom by yourself, or you cannot easily transfer yourself or move yourself. So we know that usually the elderly, this happens to them, but it can happen to even younger people if you get a certain disability or sickness. So it's good, again, we're here talking about financial literacy. How do you manage these life situations without losing everything that you've worked hard for? The last but not least here is terminal illness. This is where if unfortunately the physician or doctor diagnoses a person with less than 12 months to live, you get all of it at once. All the money that you put in, it's a lump sum payment. Whereas these other ones, like critical illness and chronic illness, you do get a small percentage per month of your money though. Remember, again, here we're talking about if you have chosen life insurance policy that has living benefits. That means it's not the group. It's not the one that they give us at work if you're employed. And it can exist within term and the permanent one. However, term, it will only exist during that window of time that you chose. So this is a nice graphic that I like that shows how specifically if you're interested in protecting yourself and also accumulating your savings, getting your savings to grow at a higher rate than just keeping them in a savings account. Index Universal Life will give you that protection in case you get sick or there's any death, and it will also allow your money to grow tax-free, and they make sure that it's a cap. So there's what we call floor rate, where we know with the stock market, it can go up 20%, and then next month it can crash depending on what a politician said. It can go down negative 10%. So with the unique way that this one is set up is there's what is called the floor rate, meaning that your money will never go down less than 0.25% increase or interest, okay, which is great. There's also what we call a cap, right? It will also grow up to typically 7% interest. So if you are a person who likes that security, you want your savings not to just crash, okay, and you're happy to keep them growing at a steadier rate than just keeping them in a typical savings account, this would be a great tool and an option for you. So let me then address the question, why is it important again to start sooner? Why don't I wait until I'm at that age where I'm likely to get these illnesses, right? The thing is that this is a privilege, right? You only, before you even get this policy, they have to test your health condition to make sure that you don't already have existing illnesses or disabilities. And if you have them, it's okay. It's just that the premium will be higher, meaning that the monthly payment that you pay is going to be higher than if you get it when you're as healthy and as young as you can be. We are all, today is the youngest we'll ever be. Tomorrow we're going to get older and older, and there's obviously health risks that come with that. So it's important that when we see something that is useful, we share it with each other, like we're doing here, and we actually take action. Otherwise, it's like learning that smoking is not good, but then we keep doing it, right? So if we learn something, it's important to consider it and see how it can benefit us and benefit our community members and our families. So to emphasize the key point here, the younger you are, the healthier you are, and the lower the monthly premium you pay, monthly fee. And the good thing is that you lock in those benefits. Say, and I'm happy to connect you with, again, setting you up with a one-on-one meeting and consultation where we can see how this would work for you on a one-on-one basis, so that you figure out how much monthly fee you would need for this. Just to do a back important note there is that people who write this for you have to be licensed. They do an exam, they're licensed and known by the state. The people who write and issue life insurance policies, they're in the same category as those who offer car insurance and health insurance. So they are people that are vetted and that are known, right? So they can't just be some random person doing it. So if you reserve a one-on-one session, we'll make sure that with a licensed professional in the state of Missouri or Texas or wherever you are. So you're going to be able to see what monthly fee you would need for what protection you need. Okay. And like I was saying, when you lock it in, when you get it at that age and that fee, it can stay like that for the rest of your time, right? You're not going to be increased in charge if later on, 5 or 10 years later, you get an illness. It's going to stay that low amount that you got when you were still the healthiest. So the questions that we've received, this is again a community series that we do discuss, and we take questions of things that people would like to know and for us to talk about. I got to meet this couple actually in a convention that we had last June. These are a husband and wife. They are young people actually, but unfortunately the man got diagnosed by cancer, and he brought that diagnosis and submitted it to collect his money basically for living benefits under the life insurance policy. And he was able to collect the check of hundreds of dollars. I believe it was around like 200,000 or so. We're going to listen to their story here, so quote the details from the video specifically. But the unique thing is that this person ended up getting treatment, and he actually went under remission, meaning that he got better and he's now living his life okay. However, he still got his money back. So it's like, again, our car insurance. If you have just paid an insurance, a car insurance today, and tomorrow you crash, you still get a large amount of money that is not equivalent to how long you have been paying for. So that's the same thing as here, but obviously we gotta protect our lives because we are more precious than cars. So I do want to play their story so that you can hear them directly. And again, these are real life people. I met them. Their story is very inspiring that you know, we tend to highlight it because they are people that do go and speak to other people, encouraging them like, hey, protect yourselves. It can happen to anybody, young or old. So let's share this, and then I'll start actually wrapping down so that we can take any questions and discuss.
I met Kip back in 2011. I prank phone called him when I spent the night at a friend's house.
One day I received a phone call from an unknown number, and it was two girls that were prank phone calling me. I knew one of them, and the other one I didn't know who it was.
He ended up reversing the prank phone call on me.
I convinced her that we knew each other and that if she wants the full story, she needs to come over to my house and I will give her all the details of how we knew each other, and I made it all up.
I went to his house, which wasn't a good idea, but I went to his house and I met him there, and we sat up for hours just talking about everything.
It was probably the first real conversation I've ever had with another person, and she got me to open up for probably the first time in my life, and I knew she was the one.
We hung out every day after that.
When her standards were just low enough, I asked her to marry me, and she said yes.
I had Aubrey in 2014. I was 21 years old.
Being a father is what I needed.
Hadley was born in 2016, and she's just a ball of energy.
She's a rainbow child, and here we are with two beautiful children.
So these people were married for 10 years and had 2 kids.
It was the beginning of September. Kip started getting really sick, and we were in the middle of packing up our house because we were going to move.
I was coughing, sneezing. I thought I just had a cold, and so I didn't really think much about it, but it just kept getting worse. I just kept coughing and coughing up like phlegm, and it wouldn't stop.
He was complaining about his chest hurting and his heart, and I told him, I said, if your heart's hurting, you need to go to the doctor. They put him on a Z-Pack, thinking that it was just bronchitis.
Took my first set of antibiotics. It didn't go away. My resting heart rate was 120. When they got me on the treadmill, it was going up to 140, 150. My blood pressure was skyrocketing, and they were convinced it was more than bronchitis at that point.
It was my birthday, October 5th, and we went to our house, got the last of our stuff, and left the keys on the counter. And we went to Hobby Lobby for my birthday, and he got a phone call, and he walked away, and which was really odd.
I let her know that I had to go get a COVID test right away, so that way I could go in the following day and get a biopsy. The next day we went in and they took this big needle and they shoved it in my chest 6 or 8 times and pulled out chunks of the tumor to test it. And the doctor knew prior to the test that it was lymphoma. He said that your lymph nodes, a huge lymph node in your chest, and it's most likely lymphoma. I've seen it a million times, and it's cancer.
At the biopsy, I was still kind of hopeful, thinking that it wasn't serious. But the doctor came in and told us that it was cancer, and that if he put Kip up against a wall and threw a dart, that he would hit it. And then we left there, and Kip went downhill really, really fast. And he started not breathing. And I would be up all night watching him. I'd be up all night watching him sleep, because he had to sit up in a chair to sleep, because if he laid back, he couldn't breathe.
They would give me chemo multiple times a day, and then my lines would clot up. I still have blood clots in my arms. That one will clot up, then they'll throw it in the other arm through my artery that way. Then that one will mess up, and then now I have a port in my chest, and that's how they do the chemo through my jugular into my heart. I was getting docked pay because I didn't have enough sick hours on my books. I had a sergeant that campaigned for me, and tons of people donated sick hours, an unbelievable amount, and people donated money to help us to be able to pay for the multiple times we were driving back and forth between Bakersfield and UCLA, and for all the co-payments we would have never been able to afford. We ran out of money so quickly, and we were praying. We were praying. Our friend Rick, he helped us. He explained to us that that's what your living benefits were for. It was something we had kind of forgotten about because my mom had gotten a policy from me so long ago. I thought it was for when I die, my family was going to get the money, because when my dad passed away, we didn't really get anything. But Rick said, no, you're going to get you can cash this in and get a percentage of your policy. And that percentage was pretty nice.
We got a call from Rick that we were getting our check, and it didn't feel real at all. Then when we saw it in the account, we kind of just looked at each other, and our mouths dropped, and it was just shocking.
It changed my life dramatically. I was on the verge of death, and now people are like, wow, you had cancer 4 months ago? And yeah, this living benefits policy was able to allow me to see what it's like to be in a different class for a little bit and experience some of those benefits. And it changed my life. I was in the hospital dying, and my wife was in there supporting me, and at the same time she said, this is it, this is the right thing to do. And so she sat there on the computer and supported me, gave me words of encouragement, watched stupid shows in the hospital with me, and sat on the computer and took all her classes and studied. And she was going to help, because now she realizes, hey, maybe Kip's not going to be around. I need to be able to take care of the girls myself. So she found this amazing company, and so she wanted to become a part of it. She believes in it, and so she's doing it, and I want to do it too.
These living benefit policies are the most important thing that you can have for your family.
Now, Danny is a Freedom Equity Group agent, and she's the full package. She's the breadwinner, and she's beautiful.
When you were born, your mama said, the Lord bless you and keep you, in everything that you do, take heart.
Alright, so I like this story because these are actual people, that we've met. The other thing is that for our Rwandan community specifically, you heard that his parents had already gotten him that policy even when he was a kid. Remember that the monthly payment is very small the younger you are. It's smaller the younger you are and the healthier you are. So this product is also available for kids. And it does give them access to their money more than like college savings accounts would, because a college saving account a student can only use it to get money for their books or for tuition. But if they have something like this, it will not only protect their life, but the savings portion, they can use it to buy a car, to pay for their apartment, to do anything else that they need the funds for. So just to summarize everything here, again, for our communities, it's important that we have a good backup so that we are not only relying on GoFundMes or family or friends to help us if we get sudden sickness, serious sickness, or unfortunately death. And just to debunk some myths about living benefits, you do not need to die to use them. You will get your money to use while you're still alive, and you can even get better and continue your life while you already cashed out that money. They're not going to take it back from you. Is this only for old people? No, you just saw those people are, pretty young. And like I just mentioned to you, this product is also available for minors, kids under 18, if you'd want to set them up to start their savings early as well as protect their lives. Will you lose your death benefit if you use living benefits? No, right? If you cash out your money in case of cancer or any other sickness, you will still get that death benefit later on, at the time of passing. Your beneficiaries will still get that money while you also used it while you were alive. So there will be a percentage that you use while you're alive and another percentage that they will give to them when, the patient dies. So again, how these living benefits work, it will depend on your policy. If you got the Index Universal Life Insurance or the term policy and it's within that specific window of time, age and health condition matters a lot in terms of how much you pay per month. And you can, if you start early at your healthiest, you lock in that amount for the rest of your life, basically. So if you'd like to know how this would work for you specifically, I'm happy to share one-on-one with you. We'll bring in a licensed financial person who can do some illustrations, and you can say, okay, how about if I do this amount per month? How much will I qualify for? So all of that. So this is the email that you can contact us at, or even just write to me directly and we can plan this. ibfinancialfreedom@gmail.com. So we are happy to share and grow together so that we're all protected as a community. Thank you for your attention, and we'll take the next 10 or so minutes for Q&A, for questions, and then we'll wrap it up.
Thank you, Sharon. Really great. We have a few questions I think probably maybe one in the chat box. Do you want me to read it out to you? Are you able to read it out from there?
Yes, please read it.
All right. Yeah. This is actually Kalinga Nihorimbere. He's asking, would you recommend a universal life insurance over term insurance or to have both? I have heard that term is cheaper and better when you are young because by the time the term is over, you would have saved enough and paid out your debts. You want to take that one on? I can piggyback you.
Yes, let's address her first and then we can continue. Thank you so much. Kalinga, wakoze ku kibazo kizubajije. Thank you for the question. So the question, to maybe paraphrase it, is term life insurance versus indexed universal life. And if you start young, the differences in monthly premiums. It is true that if you take a term life insurance, you're going to be paying lower than if you do an indexed universal life insurance. So let me give an example. Say you're a 40-year-old female or if you're starting younger, you may start maybe at 30. So 30-year-old female, and there are two quotes. One is for term insurance, and then the other one is for index universal life. For term, you may be paying maybe $50 for 20 years coverage, and index universal life, you may be paying like 100 per month, and then maybe you get like 100,000 policy. You may be, even for term, it could still be 100,000 policy, but you're paying half per month. The thing is that yes, for term it's going to be lower, but remember, it only covers you during that time, and you never get back that money if the term ends and you haven't used it. You didn't get sick, there was no death. And if you were to go back and get another term, you're not going to be 50 years old. The monthly premium to get 100,000 coverage is going to be probably like 200 or 300 per month. You see? So if you're young, you can still get an index universal life insurance policy at a low cost. I'm going to speak for myself. So when I started, I was like 26 or so, 27. And I got my index universal life insurance policy at a monthly amount that would be the same as somebody who is, let's say, 40 and doing term, right? So if you start young, the index universal life insurance will also be, the monthly premium will be relatively low, and you're going to lock it in. It will not end until after 120 years, which most of us will have gone by then. And you still get, the other added thing is that you get cash value accumulation, right? You get your money, part of it goes to protect you, the other part goes to accumulate in terms of savings, right? So whenever you can cash out that money after typically 3 years, but then the longer you leave it, the more it compounds. It's compound interest. So to summarize that question again, yes, for term is recommended for people with young families. Let's say you have 3-4 kids, and you want to make sure you push them maybe until they leave for college and they are on their own. And you just want something to cover them in case you were to pass before they are young. So those are questions that we can look at a one-on-one basis, and then we compare, how much you would be paying per month in index versus term, just so that you get the best value for your money. Yes. Okay. So I hope that answered you. If you have any other added comments or questions, feel free to speak up or share more in the chat.
Yeah. Thank you. I appreciate the way you addressed it, because it's hard to know which one, if you're going to be spending a lot of money with life insurance, because it's a big premium, and you could be investing it somewhere else, but there is benefits to, like, when you get sick or have cancer, and you can get more money out usually through that. So yeah, like insurance is always a gamble for them and for us, but as you said, it's very important because you never know what's gonna happen. So I appreciate your help.
Exactly. Thank you so much for your question and comment. Let me see. So, Mr. Ebert, go ahead and read for us more
Yes.
questions.
Thank you there again. Bill is asking, what about disability insurance? Does IUL insurance replace that, or you still get both?
That's a great question. And I'm going to let the, financial experts in the house here add on to anything that, you feel like I may have missed out. So disability insurance, Bill, that's such a great question, by the way. Like, disability insurance will only cover what is termed as a disability. However, those living benefits exceed disability, right? So if you get, say, let me pull up the examples again here. the disability would tend to fall under chronic, because you may not be able to bathe yourself, dress yourself, eat, use the restroom yourself, or move or transfer yourself. However, if you get a critical illness and you need an organ transplant, or you have cancer, that's not termed as a disability, right? So then that disability insurance is limited, whereas this one can give you more for your money again, because we never know what can come to our lives, right? We never know what sickness a person will get. So I mean, why not, if you're going to pay for that anyway, why not pay for something that will cover you holistically? So that's what I would say towards that. Any other questions or comments? Comments on top of
So
that,
can I
or
can,
go
can I
ahead, Bill.
comment a little bit on that?
Yes,
So
please.
so I guess so the question here, um, so I know with disability insurance, um, so they'll give you, so that is kind of like your income, an income replacement. So they will pay you. So as long as you are unable to work, so they will pay you. I mean, there's no limit to that. So in other words, so that is treated as a replacement to your income. So the part that I'm not sure, does the index universal life insurance also work the same way? Or so for example, right? So let's say if you get into an accident and then you are handicapped, you can't work, you can't work no more. So I know with your disability, based upon your policy, they can say, hey, every month you are entitled to like $2,500 every month, until you die. So does the index universal life insurance also works that way? So let's say if you get into an accident and you are unable to work, do they give you do they dedicate like a steady income to you every month, or they just cover your medical expenses?
Okay, thank you for the clarification. That helps me understand it better. So, to answer your question, they will give you your money, not just like cover the bills. So, from the video, we saw that they were able to cash out their money, so you get a percentage. So let me give you specific examples. In case of critical illness, you get up to 90% of your policy value, right? And they'll also give it to you in increments. Remember, what is critical illness? If you get a heart attack, stroke, other examples, cancer, so you get up to 90% of your policy value, and then any remainder will be covered later for death benefits. But then they are going to give it to you incrementally. So say you signed up for a 100,000 policy value, and you've only been paying for a year or two, and unfortunately a person gets a heart attack or stroke or cancer. You still get 90% of 100,000 given to you incrementally as you need it, which you can use towards your bills or towards your regular living. And then if it's terminal illness, remember, terminal illness is if the doctor has said you have less than a year to live, they'll give you all your money, like 100% of the policy value, that again you can use to finish off paying your debt, to plan for the family, to plan any processes leading up to that.
Yes, can I add to that?
Yes, please.
And sorry, by the way, it looks like we're on top of the hour, but I can
Yes,
make it
we're
quick
getting
here.
there.
So, Bill, I like the way you structured the question right there, and per what Dr. Sharon explained. If I can be quick here, the biggest catch around those two is really as to how do they trigger? How do you access those benefits on those two? So with disability insurance, The trigger is more around meeting the policy definitions or the disability definition. It could be, say, in a specific field, if you're a medical doctor and you're worried about losing your profession.
Mhm.
Whereas in the IUL, the trigger is strictly health factors, like terminal, chronic, other things. But if you look at the impact, let's actually look at different parameters. The goal in disability insurance will be a specific replacement of income. And the primary goal with living benefits in IUL is accessing your benefit during some serious illness, not necessarily when you lose your profession or when you're not able to work. Because disability of working may not be necessarily triggered around illnesses. And the trigger in disability is you can't work per occupation definition. The trigger in IUL is a medical trigger, as I mentioned. Now, the payout. Let's look at the payout. On the payout with disability, there are monthly paychecks that are prescribed ahead of the policy. With IUL living benefits, it could be a lump sum or monthly acceleration of a portion of your death benefit. And then one other highlight that is really interesting is the beneficiary. In disability insurance, the primary insured is, is initially the beneficiary. So the impact on the heirs or your beneficiaries in disability insurance is none. There has to be a separate policy for the heirs to benefit on that lump sum amount that you're insuring. Whereas in IUL living benefits, the beneficiaries, of course, are specified, but they run a risk of a reduced death benefit, which would have otherwise been available later on if it wasn't touched. I mean, the list can go long and long, but it's really different, much as it could be seen in a more common way. But they really shine or they come really handy using disability insurance when your biggest risk is a loss of a paycheck, when you think of your mortgage or family living costs, especially if you're in a specialized or high income occupation. Unlike the IUL living benefits, which are more shining when your permanent life insurance, you want a permanent life insurance, or your optionality to access funds for serious illnesses and long-term care, knowing it could cut your death benefit for sure. I hope that shed some little light there. Thank you.
Yeah, yeah. That's really helpful. The distinguishing the differences. Yeah, I think that's very helpful, and I hope he helped everybody on the call as well. Yeah, thank you.
For sure. Awesome. Looks like there are no other questions unless someone has a question. Open their mic if you allow that, Dr. Sharon.
Thank you so much. We try to stay respectful to your time. If you have any other questions or comments that you think about later, feel free to text me or write to the email that I shared earlier. Let me put it in the chat again. It's ibfinancialfreedom@gmail.com. And then we'll be able to plan one-on-one with you, and then we can discuss your unique, instance. I saw a hand up, Mr. Lloyd. Did you want to say something?
Well, Dr. Sharon, I just wanted to applaud you on the good job done, the breaking down of the living benefits. And yes, the living benefits is the new kind of insurance which you don't have to die to receive benefits out of. And yes, we have been able to see the live examples, just like the lady and the gentleman who we met over the conference convention. This is real life examples. Many people do doubt that actually is there any living benefits that can actually be paid, and yes, it is something that we have been able to live. About this time last year, there was a lady from Uganda, Miss Sarah, who came onto one of our calls, and she had just been diagnosed from cancer in January of 2024. Yeah, good thing for her. She was able to have had the Index Universal Life with living benefits. It did help her put up a good fight up until April of this year. But we did get to visit with her. We did get to talk to her. She took us through how she was able to benefit her family, get away from work and be able to fight, take care of her bills, especially given the fact that bankruptcy is the medical debt is one of the leading causes of bankruptcy. This is a very, very important topic, and it is within the framework of what we offer as financial consultants through the Index Universal Life, term life policies, and we welcome everybody who's on this call to come and join us as a client, and also as we go ahead to put up the fight to be able to encourage people to get on the board, to know more about the living benefits and to take care of their finances. Thank you very much.
Thank you again. That was wonderful. Yeah, we do know some people in our communities one-on-one, that have had these problems. None of us wants to be there, and we never imagine ourselves as, ever being there, but life is fragile. So I will conclude by saying that this is an ongoing community discussion. This group holds discussions every Thursday at 8 p.m. Central Time. There are different speakers every week, but they're all here to share so that we can learn as a community. So if you ever want to get, to this, there's a separate Zoom link that we typically use for Thursday. Today was a special one. But I'm happy to share with you that link. That way you can come and we can keep learning. Life is a learning process, right? So the more we know, information is power, the more we can build ourselves, build our families, build our communities. Thank you again for your attention, and have a wonderful night and rest of the week.